Gold is down. Silver is down even harder. And right now, millions of people who bought precious metals as protection against exactly this kind of world, war in the Middle East, inflation, a Federal Reserve in chaos, are staring at their screens wondering, did I get this completely wrong? The short answer is no. But the reason gold and silver are falling this week is not what most people think. And if you don't understand it, you will make the wrong decision in the next 48 hours. My name's Richard and this is the 2% Brief. Weekly market analysis without the noise. If you're new here, welcome. Hit subscribe so you don't miss next week's update. Today is Saturday the 25th of April. So let's get into the numbers. Gold closed the week down 2.5% at $4,712 an ounce. Silver fell harder, down just over 6% to $75.75. Platinum dropped 4% to $2,028. On the face of it, that looks bad, especially if you've been watching these metals climb for the past year. But here's the context that nobody on social media is giving you right now. Gold is still up enormously from where it was 12 months ago. Silver, even after this week's drop, is still trading at levels that would have seemed impossible 2 years ago. This is not a crash. This is a correction. And there's a world of difference between the two. So what caused it? There are 3 specific things that hit the metals this week, and they're all connected to each other. Let me walk you through each one, because understanding this is exactly what separates a good decision from a panicked one. Reason 1. The dollar is strong right now. The US dollar index, traders call it the DXY, closed this week at 98.5. That's a meaningfully strong dollar. And here's the mechanical relationship you need to know. Gold and silver are priced in dollars. When the dollar gets stronger, it takes fewer dollars to buy the same ounce of metal. So the price in dollar terms goes down. This is not a sign that gold has lost its value. It's a sign that the dollar is temporarily strong. Those are 2 very different things. For anyone holding gold in British pounds, euros or yen, this week looked considerably less dramatic. Reason 2, the Fed, and the man nobody is talking about. This is the big one, and I want to spend a moment on it because this is genuinely the most important financial development of the month, and most mainstream coverage has completely missed the significance of it. Jerome Powell's term as Federal Reserve Chair ends next month. His replacement, nominated by President Trump, is a man called Kevin Warsh. This week, Warsh sat in front of the Senate Banking Committee for his confirmation hearing. And what he said, repriced 2026. Warsh told senators that the Fed made catastrophic policy errors in 2021 and 2022, when it was too slow to raise rates and let inflation run. He said that legacy is still with us today. He talked about a complete regime change in how the Fed operates, and critically, he refused to commit to cutting interest rates. He said, and I'm paraphrasing, that the president never asked him to promise rate cuts, and he never would have agreed to that, even if he did ask. The market had been pricing in multiple rate cuts in 2026. After this hearing, the CME FedWatch tool, which tracks where professional traders expect rates to go, now shows barely 1 cut priced in for the entire year. That is a seismic shift. And when rate cut expectations collapse, the dollar strengthens, bond yields rise, and gold and silver face a headwind. That is exactly what we saw this week. Now, here's the important nuance. Warsh is not necessarily wrong to take this position. With oil at $105 a barrel, which I'm going to come to in a moment, cutting interest rates right now would risk pouring fuel on an inflation fire. A serious central banker would be cautious. But serious or not, the market reaction was immediate, and it was negative for metals in the short term. Reason 3. Oil, the Strait of Hormuz, and why this matters to your gold position. Brent crude oil closed this week at $105 a barrel. West Texas Intermediate, WTI, at $94. For anyone watching the UK or European markets, those numbers are contributing directly to what you're paying at the pump right now. The reason oil is this high comes down to one narrow strip of water, the Strait of Hormuz. Roughly 20% of the world's seaborne oil passes through it. Since late February, when the US and Israel launched military operations against Iran, that strait has been functionally closed. Iran has blocked it. Ships have been seized, mines have been laid. The International Energy Agency has described this as the greatest global energy security challenge in history. Brent crude peaked nearly $120 during the worst of it. We've pulled back from those highs, but $105, we're still in crisis territory. There was a brief ceasefire in early April. Iran said the strait was open. Oil fell sharply. Then within hours, Iran reimposed restrictions. Prices jumped again. This is now the defining pattern. Hope, then disappointment, then more uncertainty. And here is how this connects directly to gold and silver. High oil means sticky inflation. Sticky inflation means central banks cannot cut rates. Rates staying high means a stronger dollar. A stronger dollar means downward pressure on precious metals, at least in the near term. All three of this week's headwinds lead back to the same source, a Middle East that is still on fire. But flip that logic around and ask yourself, what happens when the strait reopens? Oil falls, inflation pressure eases, and the Fed finally has room to pivot. The setup for gold and silver at that point is historically compelling. JPMorgan is still forecasting gold at $6,300 by the end of this year. That's not a fringe view, that's one of the world's largest banks. Now let's look at where money did go this week, because the contrast is instructive. Bitcoin was up 2% on the week, closing at $77,700. I say closing. It never closes, it's permanently open, but that is the price currently when producing this video. That might seem strange if gold is falling. Why is Bitcoin rising? The answer is that Bitcoin is no longer trading like a gold alternative. It's behaving more like a high-growth tech asset. Volatile, momentum-driven, and right now it's catching a bid from enthusiasm around artificial intelligence and the tech sector broadly. US markets on Friday confirmed that split. The Nasdaq was up 1.6%, the S&P 500 gained 0.8%. But the Dow Jones, heavier on traditional industry, more sensitive to rates, was down 0.2%. European markets were broadly off between 0.5% and 1%. Europe is feeling the $105 oil price more acutely than the US because of its much greater dependence on energy imports. That is a real structural headwind for European stocks that's unlikely to ease quickly. Capital is rotating out of energy-dependent old economy assets into US tech and anything with an AI story attached to it. Whether that rotation is rational or not is a different conversation, but that is where the money is flowing right now. So what does this mean for you? Well, if you hold gold or silver and you're watching this week's numbers and feeling anxious, I want to give you one clear thought to take away. The reasons gold and silver fell this week are temporary. Strong dollar, hawkish Fed nominee, and an oil shock that is keeping inflation sticky. None of these are permanent conditions. The structural reasons to hold precious metals, rising global debt, central bank buying, geopolitical fragmentation, the long-term weakness of fiat currencies, none of these have changed, not even slightly. The people who panic sell into a correction like this are, historically, the same people who panic buy at the top of the next rally. Don't be that person. This is my analysis of the past week. If you want to know what to look out for this coming week with specific pricing targets, then go over to the 2% brief on Substack and subscribe there. Inner Circle members get that precise detail every Sunday evening before markets open. The link is in the description and comment section below. And if someone you know is staring at their gold or silver position right now and panicking, send them to this video. Not because it has all the answers, but because calm, grounded analysis is genuinely hard to find right now. Like this video if it gave you something useful, and subscribe if you want to see it every week. Thank you for watching.